What's up, guys? Welcome back to the channel. Video on XPeng stock. I'm going to go over a brief overview of the business model, deliveries, price targets, the European expansion, and reasons why I think it's a buy. I don't currently own XPeng stock. My positions are listed top right for your reference. I'm going to keep this video brief and to the point to respect your time. So that said, let's get right into it. Very quickly on the business model, their target demographic is the tech-savvy middle class in China. It's a huge demographic and it's growing fast. Competitive advantage. They're attempting to differentiate themselves from their rivals by developing in-house autonomous driving features and other technologies. XPeng's P5 is considered the most cost-effective EV in China without leaving out the quality hardware and intelligence. It's an affordable mid-sized family sedan anywhere from $25,000 to $36,000 after subsidies. One issue currently, which is lack of capacity, that's leading to consumer complaints on the long delivery times. XPeng also offers SUVs under the G3 name and a four-door sports sedan under the P7 name. And last, they have revenue diversity with sales contracts, maintenance, supercharging, vehicle leasing, and ride-hailing services. On to deliveries. They delivered a little over 6,000 EVs in February of 2022, up 180% year over year. That is impressive. However, it is significantly down over the last few months, reasons being the Chinese New Year, the Olympics, and China subsidy cuts. However, so far this year, XPeng does have a significant backlog, so in order to expedite deliveries, they completed a technology upgrade at their plant during the Chinese New Year. Okay, moving on to buy ratings and price targets. Per MarketBeat on March 9th, the 11 analysts who covered XPeng had an average rating of buy, 10 had a buy, and only 1 had a sell recommendation. And those analysts who updated their 12-month price targets in the past year had an average of $56.76. So that represents a potential 148% gain from the current share price of $22.91 at the time of this recording. Furthermore, per a research note on February 8th, Barclays initiated coverage on shares of XPeng with an overweight rating and a $33 price target. And that's going to represent a potential 44% gain. And third, an article by Baldwin from Citi says XPeng has an average of a strong buy rating and an average price target of $59.58. And that represents a huge potential gain of 160%. So as you can see, all three average price targets represents a very healthy potential return. On to international expansion. Their European strategy is a combination of their own retail stores and an integrated retail and service network of local agency partners. They're starting reservations for the P5 Smart EV sedan in 4 European countries: Denmark, Netherlands, Norway, and Sweden. And I have 4 key points. Number 1, the P5 will have LiDAR, but it's going to be a less sophisticated version of the P5 that sells in China. Number 2, price to be determined, so keep an eye out for that. And number 3, the P5 is going to be a mid-sized family sedan, so it's going to be a brand new customer base. And number 4, the P5 will be competing for market share against many EVs, notably the Tesla Model 3. And they will have a physical presence in Europe. Last month, they opened their self-experience store in Stockholm, Sweden. And soon they're going to be opening their first showroom in the Netherlands. Customers can start test driving the P5 in April. And furthermore, they entered into 2 partnerships with major European automobile players for agency retail collaborations in the Netherlands and Sweden prior to the P5 expansion news. Final take, 4 reasons why I think Xpev stock is a buy. Number 1, the share price is near a 52-week low and the price targets relative to the current share price. I do take price targets with a grain of salt. However, the gap is so huge that can't be ignored. Number 2, the RSI is now under 30. To me, that seems way oversold, and at $22.94, I think XPev is a buy. Number 3, the share price is now attractive due to the macro events pushing down EV stocks in China, concerns over commodities inflation, and broad selling due to tensions over the China and Russia alliance. And as bad as this may seem, it's still a short-term headwind, and as soon as Wall Street senses the end is in sight, the share price is going to bounce back in a big way. And number 4, XPeng has a clear vision on how they're going to take market share. They have a good target demographic, competitive price points, and they're not competing with Tesla head-to-head. And they're expanding internationally, but doing so carefully and in a calculated manner. And that does it for XPev stock. I hope you guys found it helpful. If you did, please consider subscribing and hitting the thumbs up. It'd be greatly appreciated. I'm also open to video requests, so let me know if you have one. That said, hope you guys have a great rest of your day, and I'll have another video out very soon. Take care.